second part of it is that, it is, if you studied economics or you were privileged to have a minor in it or something like myself, you would have been taught about this thing about human wants, that wants and needs. And they said, it was said that human wants are insatiable, right? Human wants are insatiable. So, which means human wants cannot be satisfied. Once a particular want has been satisfied, you would always want a new thing. Today, you want the latest iPhone. Once you have it, you're already thinking of the latest Samsung. Once you have it, you're already thinking of the latest this. Once you have it, it could be wears, it could be wristwatches, it could be anything at all. Human wants are insatiable. Okay, so which means that we are always looking forward to satisfy to the next want. And once it is been satisfied, it becomes insatiable again. Does it make sense, everybody?
Yeah.
Good. So, funny, but the truth is, the same thing is applicable in the market. Okay, the same thing is applicable in the market, and that is the concept of efficiency and inefficiency. Don't worry, I'll show you a number of stuff now. But just before that, let's not jump. The first thing we need to talk about today is order block. Let me look for that curriculum. There you go, copy and paste. Nice. Order block. So there goes the question, guys. What is order block? Anybody? Somebody? Contribute, please.
It's the candle that has institutions set their orders in to either take it up or down, I'm assuming.
Good. So that's one view. Any other person? I really enjoyed our session the last time because we're all contributing and it was really interesting. So please, let's maintain that momentum, okay? Because the more you contribute, the more I can give you more, actually. Because the truth is, I don't have any, you can see I'm not sharing slides with you. I don't have any of these things written anywhere. I'm actually teaching you from what I know. So if it's been updated, yeah, you're getting it updated. And the more, if you want me to talk, the more you want me to talk is it's dependent on how you interact with me too. You understand what I'm saying? Like it's like a debate. Does it make sense, everybody?
Yeah.
So, and I believe it's better that way. Okay. So we can digress, talk about this, talk about that, and at the end of the day, we get value from it. So any other person wants to add to what the last person said about order block?
The candle which pushed aggressively and broke the structure.
Okay, the candles which push aggressively and breaks the structure. That's one way. Another person?
Mostly I use it like supply and demand areas.
Okay, so order block, you use it to determine your supply and demand areas. Okay, and you always look forward to your supply and demand areas to be mitigated, right? So to be respected, so to say. Okay. Yeah. That makes sense. That makes sense. Now, the first thing I want you guys to get rid of in your understanding about order block is the concept of institution having their orders in a particular candle. Okay. Now, it works this way. I want you to start seeing the market, not just the Forex market as a Forex market, but I want you to start seeing the Forex market as a market first. Then the Forex aspect of it is just the fact that it deals with foreign exchange and is being represented with candlesticks. But first, it is a market. Now, in any market scenario, you have many participants. Okay, you have many participants, just like you have, just like you've been taught in the basics of Forex. We talked about the market participants, which are the retailers, the hedge funds, the banks, the government, and the likes. Okay. Now, in any market situation, there is the participant. And look, in the physical market, you have key participants like government. You see how government tends to intervene with price floor and price ceiling. For those of us who did economics, for those of us who did the economics, we're talking about how government tends to determine certain price for products in the market. Then you see we have the sellers, we have the buyers. All of these are participants in the market. Now, these buyers comprises of different classes of buyers in terms of we have those that are wealthy, they are filthy rich. We have those that are okay, they are average, they are technically rich. And we have those that are poor. Everybody, you find them in this market. And in any sane society, in any sane environment, those who are wealthy, who are rich, tends to be what of the lower percentage in that society or environment. True or true?
Yeah, true.
True.
Then those who are poor tends to be the vast majority. The same thing is applicable in the market, in the forex market. Majority of the people that you see that trade the market are poor. Not that they are poor as in they don't have money in their account, but they are poor in the sense that their mentality towards trading is actually poor. Okay, so the way they apply in the physical market based on their pockets, now in the forex market, they apply it based on their mentality, based on their thinking. So they think poor in the market. So it's not their fault. It's not their fault. It's just the fact that it is being controlled to an extent. Okay. And when we say it is being controlled to an extent, who is actually controlling these things? If you look at the physical market is being controlled by who? By the government. But the government doesn't have full control. They just have control to a certain level where they can manipulate certain things. So the same thing happens in the forex market. They don't have full control about the market, but they can control your education. Okay, they can control the kind of education you are going to be exposed to when you start learning forex trading. And this kind of education shapes you into believing that this is how it works, because the vast majority is actually telling you, singing into your ears, day in, day out, that is exactly how it works. So it's going to take a long while to let go of those education. So they control it in these manners too. And there are other ways that it can also be controlled. But if you look at the candlesticks in the market, be it an aggressive push, be it not being an aggressive push, you can never tell for sure if this candlestick, if the party responsible for this candlestick are the retail traders, or the party responsible for these candlesticks are the government, or the party responsible for these candlesticks are the hedge funds or whatever. Can you tell which candlestick belongs to any of these market participants? When you look at the market, can anybody tell?
No.
No, you can't. So it means that it is totally wrong for you to start looking at certain levels and then you say, oh, the institutions have their money here. Okay, if there is money there, there is money here, there. If there is no money there, there is no money there. Forget about who has the money there or who doesn't have the money there. Okay, that way we begin to see things from the perspective of everybody. So it means that we can now easily see things from the perspective of the retail traders, the perspective of the government, the perspective of whatever institutions that participate in the market too. Okay, so now when it comes to the concept of order block, a lot of education out there tells you it can also be called institution funded candle, meaning it's a candle that is being funded by some quote unquote institutions. So therefore you have a candle like this. Then you have one that has, aggressive push like this. And then now you have this guy as your order block. Oh, in some cases, you could have some moves happening here. Then they say they buy and then they push the candle down. Then what is expected for price to come back here to mitigate and then continue lower. I believe everybody here sees the concept of order block to be something like this in a large, to a large extent. You guys see this as the concept of an order block. True or true, please?
True.
Yeah.
So irrespective of how you want to define it, okay, this is what you are going to get. Irrespective of how you define it. But you see, what we should really be concerned about is the significance of an order block. We should stop. What I want you guys to stop is stop thinking for the institutions. Stop trying to think for them like, oh, this particular candle is their candle. No, it could be anybody's candle. And somebody will be like, how much do you have in the market that you want to trade against the banks? Or how much do you really have? You just put in some couple of thousands. Banks are putting millions and billions in the market, and you think you can trade like the banks. Let me ask you one question though. Across the globe right now, what is the percentage of retail traders trading the market compared to the banks? Is it more or less?
Very less.
Mhm.
The retail traders.
Is there more people, but there's more capital with institutions?
Yeah, there is more capital with institutions, and then there is less. There is more retail traders trading the market, right?
Yeah.
Yeah.
Good. So now, if we have across the globe, if we have 7 billion, probably 8 billion people in the globe, and for example, we have let's say 1 billion people trading in the market, for example, and out of this 1 billion, like how many do you think would be retail traders, and how many do you think would be whatever institutions or banks?
95% retail traders.
95% retail traders. So now this if we have 95% retail traders and we have the market doing let's say 7 billion per day, 7 billion per day, like how much do you think the what do you call them, the institution traders are putting into the market?
Maybe 6.5 billion of it.
6.5 billion of it. So that means that the entire 95%, which is 950 million, is just putting 500 million into the market. Will you believe that?
Yeah.
Please think it through. Would you believe that? Myself, yourself, and every other 900 million, all we have in the market is 500 million.
No.
It's
is
just
more.
5 billion. Is it? Do you think that is going to be true?
No. There could be more.
There could be more.
Yeah.
You see, an average retail trader who is serious about the market, or who isn't even serious about the market, has $500 to $1,000 in his or her trading account. Are we together? Now, $500 to $1,000 at a particular time, placing a trade, and 95% of them in the market, that is a lot of money.
Yes, sir.
That is a lot of money. The thing is, a number of us don't really think this whole thing through. We just take the information the way they give it to us.
Yeah.
What I'm saying in essence is sometimes it's true that the institutional traders have a lot of money in the market, but sometimes the retail traders collectively, the money they have in the market far exceed that of the institutions.
Makes sense. Yeah.
Makes sense, right?
Okay, so all we just need to understand is how the retail traders trade the market.
And do
That
the
is
opposite.
why you see the concept of fake BOS and inducement. That is why you see that it tends to work really good. Because majority of the volume in the market actually do come from these retail traders. That is where they are interested in placing their trades.
Yeah.
Yes, sir.
Does it make sense now? But
Yes,
they
sir.
don't want those controlling the market, the government, more or less. They don't want you to think in that way. So they make you feel you are contributing little or nothing to the market. So all we just have to do is reverse engineer this whole thing. We have to start thinking out of the box. Does it make sense now?
Yes, sir.
So rather than drowning in, oh, other block belongs to, what we just need to understand is what is really the significance of an order block in the market. I don't care who is responsible for it. What is the significance? Any concept at all, what is the significance? What is the significance of it? And the purpose of you trying to understand the significance of it is for you to be able to differentiate it from if it is subjective or if it is what? Objective. And once you can get that right, fuck whoever is behind it. Just focus on that which is right for you. Does it make sense, everybody?
Yeah.
Yeah.
Good. So you see, I sat down and I thought about this whole order block thing because it works. No doubt order block works, right? But we've seen a number of times that the price just goes through the order block, disrespects it, right? But order block works. So I sat and I thought to myself, wait, what is the significance of an order block? The person who propounded the concept of an order block, what was the person thinking before he gave it the name order block? Because at the moment, there is no generally accepted definition for an order block. So all we can do is think it through. And when you're thinking it through, don't overcomplicate it. Don't overcomplicate it. Now, what is the expectation of everyone trading the market? The expectation of everyone trading the market when they are presented with an order block is they expect price to reverse somewhere there. Hence why most people use it as supply and demand level.
Yeah.
Right? Because they expect buys to happen on demand, sales to happen on supply. But does it really happen like that often? No, it doesn't. Price does not necessarily have to get to that particular order block that you call order block before price reverses. Sometimes price reverses at another level entirely, and you're like, oh, it didn't get to my demand, or it didn't get to my supply, which is your POI, quote unquote. Are we together, please?
Yeah.
Good. So I said, order block. Wait, could an order block be a block? You know, the candlesticks in the market looks like a block, right? So could an order block be a candle in the market that has orders in it? So therefore, price comes back to that candle, picks those orders, and then reverses. That's one way to look at it. That's a possibility. But the person said order block. And I thought again, could it be that an order block is a candle in the market that blocks orders from going through it, hence price rejects from there? Because when price is moving bearish or bullish, those are orders that are moving. So when it gets to the order block, does it mean that it is blocking the orders from going through it and then it reverses? Well, when I thought about it, I was no longer interested in being right or wrong, because at the end of the day, what it did was it made me understand that if this is an order block and it has it's a candle that has orders in it, price came there and reverses. If this is an order block and it's a candle that blocks orders from going through it, price still came there and reverses. So for this to be right, we need to see how price reacts in the market most often than not. How does price react in the market? For example, you have higher high, higher low, something like this. You see, price could do this. And voila. If that definition of an order block is anywhere close to being correct, then that means that for price to turn here, there must have been an order block in the past. There must have been an order block. For this to turn here, there must have been an order block. There must have been an order block. An order block. An order block. Is it making sense now, gradually, everybody?
Yeah.
Okay. For the concept of an order block, the way it is being explained, irrespective of how you think about it, since it is responsible for price reversing, it means that anywhere price reverses, there must have been an order block there. Otherwise, it is what? Subjective. Are we together, everybody?
Yeah.
Yeah.
Good. Otherwise, it is subjective. So the only way to see it being objective is there must have been an order block there. Now, if we look at a typical market situation, we would see that a typical market situation, for example, in a downtrend, a typical trend, you have lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Let's leave it like this. Now, in these lower lows and lower highs, majority of us, because remember all of these are candlesticks, more or less, majority of us, what we do is we come here, the extreme, pick that last candle here as our supply level, in this case. But was there any point here that price reverses from that level?
No.
None. Why?
No.
However, that is where your order block is sitting. We all agree that this is where our order block is sitting, at least to an extent. Do we all agree?
Yeah.
Yeah.
Sure.
So you are not wrong, but what you did not understand is you did not understand how to combine everything. You need to understand that the fact that there is an order block does not change another fact that there are types of order block. There is the order block generally. However, there is another type of order block that is called the sponsored candle. A number of you must have heard, a number of you must have heard that before. The sponsored candle.
Sponsored candle, yeah.
Yeah.
The sponsored candle is the last buy candle before the sell move. The last buy candle before the sell move. That is a sponsored candle for a sell. And for the buy, the last sell candle before the buy move. It is an order block, but it is a type of order block. I hope everybody is following.
Yeah.
Yeah.
Yes, sir.
Because we're digging into it gradually. There's a lot of information I'm going to drop. These two can't be treated independently. Order block, demand and supply, buy to sell, sell to buy. So I'm treating it together. Then after that, we'll treat IPA and EPA. Now, that is what is sponsored candle. Why is that sponsored candle important? Shortly, you would know. Now, what you did not really get was that when you had all of this, remember these are bearish candles and bullish candles in between, bullish candles and bearish candles in between, bearish candles like that. So you have lots of candles here, but this more or less could be your 5-minute time frame. Sorry about that. Hold on. Okay, this, for example, could be your 5-minute time frame, where you have these lows, these highs, these lows, this high. On the higher time frame, maybe the 1 hour, maybe the 2 hour, what this is going to look like could be just one candle here or more than one candle here, but this level here will be more or less just one candle or more. So one candle, one candle, one candle, one candle. This is what it's more or less going to look like on the higher time frame. And all of these candles, what is this? This is what? An order block. When price came there in the future, did price drop or not? Everybody?
Yeah.
When price came here in the future, did it drop or not?
Yeah.
It did.
Drop.
Came here, did it drop or not? It did.
It did.
Came here, did it drop or not? It did. Okay. However, when you drop to the lower time frame, you are not going to see those big single candles on the lower time frame. You're going to see them as what? A number of candles, like a bunch of candles, something looking like this. It's going to be a lot of candles like that. For example, on the 5-minute, it's going to be a lot of candles like this. However, on the higher time frame, it can be just one big candle. Is it making sense gradually?
Yeah.
Yes.
Yeah.
So you see that last candle here that you see on the lower time frame, that's fine. That is the sponsored candle. But you see the entire buy pressure, because what it has given you here is a complete buy pressure before the sell move. The entire buy pressure here is what you refer to as the buy to sell. The market bought, buy pressure to sell. You see that? The entire pressure there is the buy to sell. Then in an uptrend, it's going to be what?
Sell to buy.
Sell to buy. Sell to buy. Now, the question is, why didn't price come to the sponsored candle before it dropped? The reason for that is because, get this and understand it once and for all today. Your demand level is never in your sponsored candle. Your demand level is always sitting in your buy to sell and your sell to buy.
So it's almost using the whole retracement or the whole range.
Exactly. So now, this is how supply and demand works in the market, okay? Let's follow. Now, you see, in the downtrend, we're using a downtrend as an example here, so the same thing is applicable in an uptrend. So in a downtrend, you have this, this. So you see, this entire level here, which is your what? Buy to sell, is what? Your supply. Your supply.
Yeah.
Your supply. Is it making sense, everybody?
Yeah.
You said, quick question. Can you say that definition one more time? The demand is not in this order block. Sorry,
Yeah.
what did you say?
The buy to sell and the sell to buy pressure, the entire buy to sell and the sell to buy pressure that you see on the lower time frame is your supply and your demand level, not the sponsored candle.
Yeah.
Okay. And that entire buy pressure or sell pressure, this is the buy to sell or sell to buy, can be your order block on the higher time frame. It could be the 1 hour time frame. Remember, you only have access to the time frame that is being provided to you on most of these chart analysis platform. You don't have access to time frames like 1 hour, 17 minutes, and 24 seconds, where you more than likely might see the candle as just one single order block candle there.
Yeah.
But you can always see them as buy to sells and sell to buys. Does it make sense now?
Yeah.
So what we'll pay attention to is the buy to sells majorly and the sell to buys, then also the sponsored candles. Those are the two types of order blocks to pay attention to. Now, you see, if this is your market, this is your supply, this is what makes up your entire supply. So what it means is that, let me show you something here. If you have this low, this high, this low, now where is my supply? Everybody agrees that here is my supply, isn't it?
Yeah.
Yeah.
Good. Are we on the same page, everybody?
Yeah.
Yes, sir.
So this is my supply. Okay, remember, every push in the market have its own market structure. So in this supply, we have something like this, for example. We have something like this. So what you need to understand is this. This is the higher time frame structure. These are the lower time frame structure, isn't it? But
Yeah.
which is internal. Okay. Now, in this internal structure, if you look at it closely, there are other buy to sells and sell to buy opportunities inside too. We can see this buy to sell, buy to sell. Can you guys see it? Buy to sell. Even this one too, buy to sell, which actually makes up the sponsored candle.
Yeah.
Okay. What you need to understand is the entire buy to sell makes up what? Your supply level. This entire makes up your supply level. Now, which means that this entire level is your marketplace. That entire level is your marketplace. You see, it is just like you going into a supermarket or going into a store or going into a marketplace. When you get into a marketplace, do you have just one store in the marketplace or many stores?
Many stores.
Many stores. And when you get to the marketplace, you begin to check the stores one after the other to buy whatever it is that you want to buy. True or true?
True.
Now, when you get into this store, okay, when you get into this store and now you meet this market, you meet this store, when you get into this market, you meet this store here. If you find what you want to buy here, will you get the item or not? If you find it here.
Yes.
Yeah.
Yes, you get it and then you get out. If you come here, if you couldn't find it here, if you find it here, will you get it or not?
Yeah.
Yeah.
And then you get out. If you come here, if you get it, will you get it or not? And then you get out. Now, if you did not get it in any of this store, chances are you have only just this last store left for you to get it from. You are confident you definitely get it from this market. So if you couldn't find it in all of the stores, then since you're confident, you're going to get it from the last store.
Yeah.
Right? And if you don't get it at all in this store, what happens?
You've lost it.
Yeah, you get out of the market.
Next market.
So your supply or your demand is a marketplace. It is not the last buy candle or the last sell candle. It is not something that has imbalance. No, it's the entire marketplace.
You can take the trade from anywhere inside.
Anywhere. It can happen anywhere. And how do you know when the trade is going to happen? You would know, definitely. Like I always tell everybody, you would know. And the power of you knowing is what? MSU. The power of you knowing is MSU combined with IPA and EPA. I believe everything is beginning to make a lot of sense now.
Yeah.
That's why you see some people in the community, you'll be like, how did you catch that trade here? Weren't you expecting it to come to this level?
But this could also apply to the 1 minute chart. If you were using seconds, it doesn't matter as long as it's just.
It doesn't matter. That's why I used what's his name? I used Hazard and was Rodrigo the last time. It doesn't matter. Time frame is just like each individual humans. You just need to understand how it operates individually. Everything is going to be applicable. It is fractal.
Yeah.
However, personally, I don't go lesser than the 1 minute time frame.
Yeah.
Okay. I don't go lesser than the 1 minute time frame. My 1 minute is majorly for entries. My analysis are mostly done on 5 minutes and above. So when I'm defining my marketplace, it has to be from 5 minutes and above.
Okay.
Okay. But don't worry, when we get to trading plan, you would get all of this. Now, you guys know what buy to sell is. You know what sell to buy is. You know how to determine your supply and your demand levels, right?
Yeah.
Yeah.
Anybody confused about anything? You want me to repeat anything here? Good. Now, let's go back to order block. So if that is the case for order block, that means that every single turning point in the market, an order block is responsible for it. Okay. Now, if an order block is responsible for it at every single turning point in the market, then that means that order block is perfect, because one way to look at order block is supply and demand, sell to buy, and buy to sell, and that means order block is definitely perfect of supply and demand. But wait a minute. I did say something the other time. I said supply and demand is subjective. So does that now mean that order block is subjective? There goes the thought again. Oh shit. See that? That is why you need to truly understand this market. You see, if you notice, everything done here was perfectly done. But how about when you have a downtrend looking like this? Higher high, you have lower high, lower low, lower high, lower low, lower high, lower low. Oh shit, where did this guy turn from? Was there, can you see? We were happy to say there's a marketplace here, but the marketplace was here. How come you're turning here? You didn't get to the marketplace before you turn. Something is definitely wrong there. So you see, what you need to understand is for this, and you see, the funny thing is, this guy turned here and Yusuf is in this trade. Yusuf, weren't you waiting for the price to come to this level? I'll be like, oh, there is no need. Oh, okay. He said there is no need. I'm going to try next time to sell it here. And next time you sell it here and it just comes to this level, I'm like, oh shit. But Yusuf, he said there was no need. Well, there was no need then, there is need now. Okay, that is me trying to confuse you, right? What you need to understand is before anything that has to do with supply or demand, the first thing is what? Liquidity. Order block is responsible for the market turning at most of the levels that the market turn. Order block is responsible 70, 80, 90% of the time. Only after liquidity has been grabbed. So which means liquidity comes first. Liquidity is actually the primary reason why the market turns at every point it turns from. However, order block is the next reason for it. But you more than likely would not be seeing the liquidity all the time, but you'll be seeing what? The order block. So what am I saying? I'm saying price can turn without mitigating an order block once it has taken liquidity. Price can turn without mitigating an order block once it has taken what? Liquidity. However, order block is one of the main reasons why the market turns at every point it turns from. Now, let's go to chart and let me show you some examples. Let me try opening the chart first. Hold on. You want to take a screenshot? Please take a screenshot now.
Yeah, got it.
Awesome.
Is your laptop charged? Your iPad, whatever it is?
Yeah, my laptop is charged.
All right.
Thank you. So you see my chart, my screen, yeah?
Yeah.
Yeah.
Sorry about that. Okay. So let's look at this here. Let's take it from this level here. Let's see. To look at this level, this whole thing here, you ask yourself, we can't see what is here to the past, neither could we see this. This definitely from this other block, this definitely from this other block, this from this other block, this from this other block, other block, other block, this again. You see that sell to buy, other block, 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 other block. I hope you guys are seeing it. Can you guys see it? If you're
Yes,
saying
sir.
something, your mic is muted, Azad.
Are you just pointing out the last buy to before the sell and sell the buy candle that shows a turn?
I'm pointing out both the sponsored candles, the last buy to sell, whatever, anything at all. So you're going to realize that it is also vague. That's why it is important to know where the liquidity is within that supply or demand level. If you look at this here, for example, just like what I explained earlier, you see that we had this entire demand. Can you see where the market decided to buy from? It didn't bother coming here at this point in time. Can you see that?
Yeah.
Good. And would you have caught this buy?
Probably not.
Probably not. That was before. What about now? Would you have caught this fake BOS, this inducement, this mitigation, and then the opportunity to enter here?
Yeah, you can see that.
See it here?
Yeah.
Awesome. Making sense gradually, right?
Slowly but surely, yeah.
Mhm. Fake BOS inducement. This grabs liquidity to the left too, which is the mitigation. Your entry goes there. You'd have caught that sell. There are other entries, but I don't talk about it. Let's see. Here, or the block, even here, still the same order block. Here, or the block. Here, right there. Here, or the block. Here, can you see? It shows that, oh, shit, there is nothing. And you see this, you'll be like, oh, price reversed from 50% of the imbalance. If you have such education, I'm here to tell you today categorically, price does not reverse from an imbalance. An order block is more or less likely responsible for price reversing. If you see price reverse at certain level, and that level shows that it is an imbalance, there is a huge possibility that if you move to the lower time frame, you're going to find an order block at that level where there is imbalance. Does it make sense, everybody?
Yeah.
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 If it's not clear, please let me know. Okay, good. There you go. There you go. I don't even know if this got there. It did, that's nice. If it didn't, that's still nice. It did. There you go. See that? They get to that sponsored candle. You see? You had your limit here, for example. Did it get there?
No, didn't reach it.
No, it didn't. Because the market play started from where? From here.
That's
You
what I
guys see
marked
it now.
on my chart earlier for EU this morning.
Awesome.
Yeah.
Awesome. Awesome. See that? The marketplace started from there. Yeah, I might have missed this entry here, depending on what the 1 minute says, but I'll be in this cell from here. I don't know what the higher time frame looks like to talk about the liquidity cycle, but believe what I'm seeing here, I would have been in this cell somewhere here. Okay, now
Can I make one quick question?
Please make as many quick questions you want to.
During that recent probably sell, there wasn't an MSU, right?
The cell I'm talking about?
Yeah, the recent one, like from where
there is.
yes,
there is. There is. If there is no MSU, I won't say I would be in the trade. Fake BOS inducement.
Okay.
Yusuf, so you know once that's provided that MSU there, where do you set your order? Is it from a specific candle, or are you just setting it above the inducement?
I execute most of my trades.
You do what? Sorry.
I market execute most of my trades.
Okay.
Within my trading hours, I know where I'm looking for. I know what I'm waiting for. And when it comes, there are certain candle formations that I look forward to before I trigger my trade. So once it happens, then I execute my trades.
Okay.
Only on rare, it's very rare for me to set limits, but only on rare occasions do I set limit orders. When I know that that is the only level of mitigation, which is something you will definitely learn when we get to Algo market structure.
Yeah.
Because, for example, sorry, here, I will put like my BOS here and use like this, like my order block, like before trading here. But like now I was waiting, for example, for the MSU and was like waiting to take out this high. I don't know if I'm explaining well.
Yeah, that's because you are not recognizing this as a structural point. And that is something we are going to be treating next when we talk about internal and external structure.
Okay, awesome.
Okay, you understand?
Okay,
so what you saw before is BOS, and then price came here. Remember this example I gave to you guys when we were treating SMC? I was like, and then it played out, and you're like, oh, it played out. But the reason why it played out was because there was what? An MSU, which you didn't know.
Awesome. Thank you.
You're welcome, brother. Let's see. For example, here on this time frame, man, a lot has happened on chart. So if you look at this here, on this time frame here, if you look closely, you're going to see here, you'll be like, oh, price reversed from where? An imbalance, isn't it?
Yeah.
Let's see if price did reverse from an imbalance. Let's go to the 5-minute time frame. Okay, it can't go beyond this. All right. I've been away for a while. My TradingView subscription ended and I haven't renewed it. That's why I can't go into the replay mode either. All right. So if you have what's the name? The replay mode, you can search for this particular thing here. This one. That was 7th of June this year. Also on the 1 hour time frame research, also 10th of June. You're going to check here. If you check the 5 minutes, you're going to see that right here we had an order block on the 5 minutes. Okay, and likewise every other time frame too. Now, if you look at this, somebody will be like, "Oh shit, price found from the middle of nowhere." But then now you know it wasn't the middle of nowhere. Can you see the entire marketplace now?
Yeah.
Yes, sir.
So right from here, we're already looking for, okay, will the trade present itself or not? Right from here. Now, if you look at this again, right here, you see price never got to that level.
Hello?
Hold on. Hello, can you guys hear me now?
Yeah.
Yeah, sorry about that. Now, if you look at this here, you'd be like, oh, isn't this the entire marketplace? Then why didn't price, you see, price didn't get there. Why did price turn here? See that? why did price turn here? This has to do with IPA and EPA. There is nothing at all in the market that is random. Everything is deliberate. You just need to know where and when to wait for the market. Is it making sense now?
Yeah.
If you waited here,
Yeah.
you waited here for an order block, you would have waited in vain. You say, oh, there is imbalance. Oh, it's engulfed it with an impulsive push. Oh, shit, sorry for that. You waited in vain. Then if you waited here, good for you. And you'll be like, oh, now you can see it works. But then is it consistent? It means it is what? Subjective. You just need to know how to pay attention to it. Hope it is gradually. It is you guys are seeing it. It's making sense gradually, right?
Yeah.
Yeah.
Good. Good. Looks really, really annoying. Oh. It's the truth. Okay. Look at this guy now. Look at this guy. It looks like, oh, he just turned from an imbalance here. Well, I don't know what is here, but how would we have approached this? There you go. Now, you see that? Can you see it was smashed?
Yeah, hit SL.
Yeah.
Yeah.
Yeah, it didn't hit SL, except you had the trades there. You see, it was smashed and it still dropped, which means there's a lot that you still don't understand. Question is, what time did it happen? What would you have done? Would you have gotten into that trade? Fucking no.
You said it didn't hit SL?
It didn't hit SL. It only hit your SL if you had a limit order here. And the question is, why on earth will you have a limit order here?
Oh, okay. We would have had a limit order there because what we've been told is that the order block and mitigation the imbalance and price will come to mitigate it and it shouldn't go through.
Yeah, you see that? Thank you for that, brother. You see that? You see, this guy took out this guy slightly. That was your fake BOS. So you're waiting for liquidity to be taken before you could trade. So it didn't matter if it took out this level because you won't be in that trade. But immediately liquidity was taken, you won't jump in immediately. You still wait to see what plays out and you begin to see this particular thing here, you would have sold.
I have a question. Let me get my pen and annotate. How would we know that this would be, come up a little bit, a fake BOS? Because from what at least what I've been taught, this wasn't really a structural point that did anything, or is it?
Now, this is not fake BOS. This is equal lows.
Right?
Yeah. So now, but just to answer your question, even if this was like this, that was fake BOS.
It's the last sell to buy.
What you were taught is this is not a significant structure point. Given
Right.
our approach, that is wrong.
Okay, so
but we don't talk about that today. We don't talk about that now because we have a section that covers that.
Okay.
Even this, let me show you something. Even this is a significant structure point. There is nothing like significant or insignificant structure point. What happens in the market is nothing but transactions. And at every point where there is a halt, it means there is a simple conflict there. There's a disagreement there. That is why you have that correction happening. In as much as it is visible to your eyes, then it means that it should be visible in your analysis.
I'm correct in saying there's just a lot more sells here than there was here, but that's still a valid. There was still sell.
Exactly.
There. That's why
there was still exactly
sell to buy.
Exactly. Okay. For example, this high is higher than this. So that makes this a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And all of this is a substructure. Anyways, let's leave this guy out of it. When we get to his session, we'll treat it.
Wait, Yusuf?
Yeah, that's my name.
I know I'm interrupting you. You know what you just showed me now, showed us just now, like going to a low time frame on that order block.
Which one?
So that order block you were just showing us.
Where? Here?
Yeah, in there. So if you go like low time frame
that's 1 minute, right?
Yeah. So my question is, so when price like that order block is a point of interest. So when it comes in.
No, the other block is not, this other block here is not a point of interest.
As in, okay, so the
purpose of marking this initially was because of the inefficiency, that is the imbalance that it showed on the 1 hour.
Yeah, as in, okay, so let's just say that we were thinking of taking a sell and we're waiting for confirmation, so an MSU. On that high, that inducement mitigation, whatever you want to call that, this high here. I don't know what time. Let me annotate. Hang on.
Somewhere here.
Yeah, here. So yeah, this high here. At that point, you'll go into a low time frame and look for like some form of MSU. But you don't know. Like, how would you know that that's not going to play? Because by the time you wait here, it's too late. If you know what I mean. Like, as you were saying, we need to do a fake BOS and then come out here. But by this time, you may have already taken the sell here and taken that loss.
No.
Like, what I'm trying to say is, how would you know that is a fake BOS?
No. Now, if you look at this here, and you see that there's a fake BOS, there's an inducement here for this sell.
Yeah.
Can you see this? This is what time frame? 1 minute.
Yeah.
Good. That's where your trading plan comes in. Because MSU, when you move lower, MSU, you'll find it everywhere in the market, especially on the 1 minute time frame. The purpose, like I said earlier, of my 1 minute is for what?
Entries.
So my liquidity grab and my analysis is from what? 5 minutes upward. So before I can pick this particular trade here, I must have seen a 5 minute MSU before I'll start considering a trade.
Okay.
So you see, all of this that happened here, when price came here and took out this low, that is my 5 minute MSU, fake BOS inducement mitigation. I'm only interested in picking the buy from the 1 minute. And when price takes out this high, that is fake BOS inducement on my 5 minute, then I'm interested in picking the sell on the 1 minute.
Okay, so you only go into the 1 minute once you see that MSU on the 5 minute.
On the 5 minute, not just MSU though, but MSU primarily. So that's why it's important for us to treat IP and EPA next.
Okay, thank you.
You're welcome. I believe it's making sense now, gradually, everybody.
Yeah.
Any other question? None.
Means we understand.
So you see, if you look at this, what is this? Is this not too much noise here?
Yeah, a lot of noise.
Too much noise. But then when you remove the noise by going higher, you begin to see things clearly.
Yusuf, can I just ask a question? Obviously, I know you said 5 minutes for the MSU, but do the other minutes, are they a significant time frame, as in 2 minute, 3 minute, 4 minute? Does it matter, or is that just
when I get to my trading plan, I'll show you what I do, but which we'll still jump into. That's the second session for today.
Okay.
But which is not entirely the trading plan, but I'm just getting into it gradually. I know we are eager to learn the whole thing, but we just have to follow the course curriculum so that it will make it a whole lot easier. But what I can tell you for now is the time frames that I use is the daily, the 4 hour, the 1 hour, the 15 minutes, the 5 minutes, and then the 1 minute. That's all that I use.
Take every other time frame off.
That's what I use. Oh, even if you look at my chart here, you're going to see that that's all I have here. See daily 4 hour. I barely use daily, weekly. I barely use 4 hour too. It's mostly 1 hour, 15 minutes, 5 minutes, and 1 minute. But I just do this like every end of the week or beginning of the week just to see what the higher time frame bias is.
I've also recently been using the same as well, just a little bit before this, and I kept getting told, no, you need to know your higher time frame dailies. And I ignored it because I did notice that you can take trades just from those time frames, and you don't need.
No, you can't. If you notice, we just talked about this cell while we were just sitting on the 5 minutes. We didn't have to go to any other time frame.
Yeah.
If I was in the cell, now I'll take partials.
I think when you analyze every time frame or too many time frames, it clouds your trade before you get to your actual.
Let me explain something to you. When we get to our go market structure, you see the importance of each time frame, and you see how irrelevant a lot of time frames can be.
Yeah.
You see, if you this is it. Let me not make it too vague. This is how it is here. You have the liquidity cycle, right? The liquidity cycle tells you that, okay, if I have something like this, my next destination, looking at this, is here. Then if I leave here, my next destination is here. Then if I leave here, my next destination is here. If I leave here, my next destination is here. Then here. Okay, you understand this based on the liquidity cycle, for example. Okay, that's when I teach you. When you understand this based on the liquidity cycle, knowing where the liquidity is sitting, it does not matter the time frame because this is fractal in nature. But when you know how to see this and you see that, oh, the lower time frame has a lot of noise. However, on the 1 hour time frame or the 4 hour time frame or the 15-minute time frame, in some cases, it is clear where the next liquidity is more than likely sitting on to you. You understand what I'm saying? Once you can tell that, then it means you know that for you to go from this liquidity point here, okay, for you to go, let me start from here. For you to go from this liquidity point here to this liquidity point here, for you to go from here to here, all you need is the lower time frame to deliver bullish here, because the next level where the higher time frame is going to is here. Yeah. And how is the lower time frame going to deliver to this level? By following MSU and with MSU together with IPA and EPA, which is what we're about to talk about. So you know that, oh, we're coming here, but anyways, price is doing this. I'm not interested. I'm not interested. I'm not interested. I'm not interested. Oh shit, won't I get a trade today? Oh, now I'm interested. I buy it.
Yeah.
Then for this day, this trade alone did 15 pips. That is 15% for me. I clear 12% out of it. I end my trading day. I'm fine.
Yeah.
So that is the purpose of the higher time frame, for you to be able to analyze and tell where you are in the liquidity cycle.
Would it be correct in saying that this is your reversal and these are continuation trades? All of these are continuation trades?
Honestly, I don't even know whatever reversal or continuation is. What I just do is I look for liquidity and I trade.
Yeah.
Because I don't believe that the market, I don't believe that there is an impulse and correction in the market. I believe the market is always in a correction.
Okay.
Okay, because most impulse you see on that 5 minute time frame or 1 minute or 1 hour time frame is actually a correction on a much more higher time frame. So right. the market is by default consolidating. Let me show you the weekly time frame, for example. Is this market trending? This is the entire market of Euro USD. Is it trending? Can you see? It's consolidating. And that's how almost every other currency pairs look like, except for that idiot called gold. Okay. Several months ago, I told them in the community that Euro USD is coming down to this level here. I told them. And we're finally here now. You see how price came to that marketplace and dropped.
Yeah.
You see how price made fake BOS inducement and then rose.
Yeah.
Doesn't matter the time frame, but we've not gotten to this level of the education. So let's just leave it. It's in the next part where we'll talk about structure. Okay, let me just quickly show you guys something on that weekly time frame. Now, because it doesn't matter the time frame, let's look at this, guys. Where did price turn from? Is it no other block? Here, other block? Where about here? Can you see? It looks like it is the middle of nowhere, right? So that one that looks like the middle of nowhere, let us put a rectangle there and see what it looks like on there, on the lower time frame. Then here, somewhere there, here, somewhere here, here, somewhere here, here, somewhere here, here, somewhere here, here, somewhere here. See that? Can you guys see it? Look at this low here. Looks like, oh, price turned from nowhere, but here, this is an easy trade to catch. Why? Because you know that the entire marketplace started from here. This one is easy, obviously there. Every other thing here is mitigation. So obviously you can tell where it came from. Then this again from here. Every other thing here is easy. Now there was an imbalance here. Look at this one here. You'll be like, oh, I don't know where this came from. Well, what did I say? Let's put a rectangle there. Then this here. But in all of these mitigations, you would notice that with certain levels were mitigated, price came, took out the high, still mitigated, and blah, 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 blah. That is because other block is good, but liquidity is better. Okay, other block is good, but liquidity is better. Now, let's go to the 4-hour time frame, for example. Well, it was an imbalance on the weekly time frame. But here, do you have an order block or not? You all see it now, yeah?
Yes.
And the daily time frame still shows imbalance. So that would be on the much more lower time frame, but it's not loading there. Anyways, shall we continue, guys?
Yeah.
All right. Oof. IPA and EPA, then we can call it a day. I hope you guys are getting some high openers though. Oof. Okay. What is IPA? What is EPA? Everybody.
IPA, inefficient price action. EPA, efficient price action, I guess.
Anybody else wants to try?
No idea.
No idea. The guess was right. Efficient and
You had Anton guessing
inefficient
then.
pricing.
Was that?
Said you had Anton double guessing then.
Yeah, efficient price action and inefficient price action. How does this help your trading? It's all about the thing we talked about earlier about human wants being insatiable. See, I don't know if you guys are taking notes, but one of the things I want you to have in your notes is this. The natural state of the market is inefficient. The natural state of the market is inefficient. Hence, the market is always seeking to be efficient.
What was after hence? Sorry.
Yeah, hence, HENCE.
Yeah. What was after that? What did you say after that?
Hence, the market is always seeking to be efficient.
Okay.
The natural state of the market is inefficient. Hence, the market is always seeking to be efficient. Now it's time. Is that one of those times that I like, where you guys get to market? I love this type of a thing where I have to do the drawing and then you do the marking. Now, in these 4 charts, kindly indicate where you have efficient pricing and inefficient pricing. Meanwhile, we all know what imbalances are and imbalance. That's what efficiency and inefficiency is all about. It's all about imbalance and imbalances, and it's all about imbalances and where you don't have imbalance. So there you go, please. Kindly indicate. Okay, Ized, that's good. Okay, I see you, Ized.
Oh, you know what? My mistake.
Are we done? Nice.
He's inducing us.
I'm not. Now, look at this. You know, everybody knows this to be in balance. But what everybody does not know is this. I ask you this question now. Is this inefficient or efficient?
You don't know. You don't know.
Can't tell yet.
Yeah.
You have to wait, I think.
Now,
because isn't it just, it's just impulse up.
is okay. Is this inefficient or efficient?
Efficient.
Efficient.
It's efficient.
Efficient. So is this inefficient or efficient?
Can't tell that leg.
So you see, the thing is, right here, the market became efficient. Why did you say this is efficient? Because you could join these two together and connect these two together. At this point here, can this connect to make this efficient again?
It could.
Is it connecting?
No, not yet. No.
So you see, the natural state of the market is inefficient. The market is always seeking to be efficient. Then it goes inefficient again. Should I go again? The natural state, you can see here, price, there is a gap between this previous price level, this high, and then now where price is. So there is a difference between this price and this price right now. Once price comes and covers this, we say, oh, it's covering the inefficiency. Then once it covers the inefficiency, it goes again to become what? Once it covers inefficiency, it becomes efficient, then it goes again to become inefficient again. It needs to come back to cover this again. So inefficiency is most often when the market is in an efficient market, is the difference between the last price high and the current price level. It is not just about the difference between these two levels here. Now, when you want to mark efficiency, okay, when you want to mark efficiency, this is what we do. and make that works for us. When you want to mark efficiency, where is this guy? You say, okay, higher high, higher low, higher high, right? We say this is not efficient. But the moment I do this, and then price goes up, I say, this is efficient here. So that is exactly what I have here. I have efficiency, EPA. Mind you, I couldn't mark this level here. You see this? I couldn't say, oh, this is efficient because I don't know if price is going to go lower. But I could say this is efficient only after price went higher. Then I said, this is efficient. Did everybody get this?
Yeah.
It is important to get this. Very, very important. Why it is important is because it is not just about you crossing this line, but it is also about you joining these two lows. When you get to the rechart situation, you will see why that is that. Okay, so for me to say this is efficient, I won't just do this. I'll have to ensure that this is intact too. This is just an indication that price went out again to take out the previous high. Just like here also is efficient, EPA. But here is what? IPA. It is inefficient now. So if price comes back here, I can buy. Look, I've showed you guys an MSU, which is a tip into liquidity. Now, pay close attention. Can you buy? Okay, can you buy is different from will you buy? Can you buy is different from will you buy or sell? Okay, /sell. Is different from will you buy or sell. Can you buy is equal to EPA, while will you buy is equal to MSU. Is everybody following?
Yeah.
Yes.
The first rule of trading, okay? The first rule of trading, the algorithm, is never, you must write that down somewhere. Never trade from inefficient price. Never trade from inefficient price action. Always wait for price to regain efficiency. Never trade from inefficient price action. Always wait for price to regain efficiency. That's the first rule of trading. Then the second rule is no MSU, no trade. So first, it has to be on an EPA, then followed by what? MSU. Can you see how it is being layered? So now, here, let me show you guys a quick example. Then we'll jump into this. Here, for example, I have, okay, let's start with this guy. There's no need. Let me just use this guy. I have EPA, now I have IPA here. My question now is this. If I am to bring this guy here, can you buy? Everybody.
You should wait for the MSU.
Unmute yourself, please, and respond now. Can you buy? Price is here now. Can you buy?
You can buy, but will you buy?
You see, it's a yes or no question, though. Can you buy?
Yes.
Yeah.
Yes. Everybody agree you can buy?
Yes.
Yeah.
The question now is why can you buy? Because of what? There is what? Efficiency. Will you buy? No. Why won't you buy? Because there is no MSU. So if I have, for example, if this is my higher time frame, let's say, for example, this is my higher time frame, okay, let's say this is like the 5 minutes, and then my lower time frame comes into it and does something like this. Now, will you buy?
Yes.
Yes.
Yes, you will. Can you see? Can you buy is different from what will you buy? Now, let's assume we've tackled this guy here. Okay. So back to this. We all agree there is EPA here, right?
Yeah.
I want you to please pay close attention because this guy that we're treating now is the backbone to almost everything you do. As important as MSU is, EPA and IPA is more important. Now, you have this guy. Price is here. Price comes here. Can you buy?
Yeah.
Yes.
Everybody
Oh.
contribute, please. Can you buy?
Yep.
Yes.
Sure.
Yes.
Yes. If you say you can buy, somebody tell me why you can buy. Everything should always come with a reason, objectively. Why can you buy?
Because price has completed efficiency.
Show me the efficiency.
But this here.
Or miss inefficient.
This level you want to buy from, okay, everybody, this level, those of you that said yes, this level you want to buy from, did you see this level? Did you, below it, right below it, did you see anything that looked like this there, where you can cross the T's and dot the I's here and call it EPA? Can you see anything like that below it? The price
No,
comes
that's
back to
inefficiency.
mitigate it. Do you see anything like this below it?
No.
And this is what defines your efficiency.
Oh.
So what does this mean? Is this not IPA inefficiency? Do you understand?
Okay, I see.
Yeah.
So,
Everybody see it now?
Yeah, now I got.
So you see,
Yes,
you
sir.
can't buy this guy.
So it should come like right here, right?
Not it should. If it should
It-
come here, then you're buying
Like
from EPA now. Not that it should. Price can decide to go up from here. It doesn't matter. But what you know is that you're not buying this. If like it should go. Because never trade from inefficient price action. Always wait for price to regain efficiency. So one way is this. This is inefficient here. This is inefficient here. So if price comes here now, I ask you again, can you buy?
No.
No. Everybody, are we on the same page? Unanimously, we can't buy, right?
You can't buy because there's nothing below here, you're saying? There's nothing, oh shoot.
You can't buy because this is inefficient.
There's nothing right here. Nothing below there.
Exactly. It's inefficient. Can you connect any two lows and call it EPA?
Okay.
Do you understand?
Yeah.
Look at this. This is IPA sitting right below it. This is IPA right here too.
Got you.
So if I have my lower time frame doing this, will you buy?
No.
No.
I want everybody to contribute. Will you buy?
No.
No, you have an
You
MS
will,
you have
but
an
you
MSU,
can't.
but there's no EPA.
Exactly. You have MSU, but there is no EPA. And the first rule is you must have an EPA. So even if you have the sexiest MSU in the world, if there is no EPA, you are not interested. Does it make sense now?
Yes.
Yes.
There will be trades where it's just going to be MSU, no EPA, and they would play out fine. They'll play out really fine. Those trades are not your trade. If you see me picking those trades, that's fine. Leave it for me. You also grow to that level where you can pick such trades. But for now, you need to follow strict rules that will give you the 10, 20% you need consistently daily. Does it make sense, everybody?
Yep.
It does.
Yes.
Yeah.
Yes.
Now, if this likes, it should continue. I'm not interested. Okay? But there are cases where it can continue within here and I'll be interested, which we'll still get to shortly. So now, what did it say here? It says, always wait for price to regain efficiency. So if price goes ahead and does this, now if price comes here, now, can you buy?
Yes.
Yes.
No.
We can.
Anybody say no?
I say no.
You said no. What's your reason for no?
I will just wait for like this still.
But you're waiting while you have here. Can you combine? Can you combine this and this now as EPA?
Yeah, you're right.
You see that? So one thing with most forex traders is we always get distracted with the imbalance that is here when price had already regained efficiency here.
Yeah, it makes sense.
You see? So now what it means is that price, that's why I say always wait for price to regain efficiency. Price has regained efficiency. Now, if price comes here and then gives me an MSU, something like this now to buy, will I buy? Of course I would buy. Is it making sense?
Yeah.
Yeah.
Good.
Yeah.
I have one question. If, for example,
For example, the thing is, do you understand this particular one that I've explained?
Yeah.
Do you understand this? You do, right?
Yeah. Yeah.
Good. Just wait. Let me finish first.
Okay.
Then we can go with any other examples that you have in mind. Okay.
Yeah.
Now we have the third guy right here. This third guy, we have obviously IPA, then we have EPA. Am I correct?
Yeah.
Now, if price comes here, can you buy?
Yeah.
Yes.
Yeah.
Sure.
See, everybody says yes now because this is not any different from this to a large extent. And you see that now, everybody now sees it better. Isn't it?
Yes.
Okay. So what if this comes here? Can you buy?
No.
I would say, yeah, if an MSU presents itself, you should be able to buy.
Answers. I'm waiting for answers.
You should wait, probably.
unless because price breaks here, this is going to be a higher fake BOS inducement, and then let me see. I don't know.
You can wait until price comes into the inefficiency area and then buy.
You see, this whole level here is efficient. So it doesn't matter if price comes here and then you can buy, or if price comes here and then you can buy. The only thing here now is that you have both can, which happened initially, and both will, which is this fake BOS and this inducement.
Yeah.
So in this case, I can even buy this directly without waiting for anything to happen on the lower time frame. These are the cases where I was talking about that I can set a limit order directly, because this point here is what we call the point of invalidation. Okay, this is the invalidation level. Why is it the invalidation level? Because if price takes out this level, it means this MSU is invalid. Does it make sense now? Is it clear, everybody?
You're saying if price breaks through this order block, then is the structure is invalid. If price breaks through here,
then it means this MSU is invalid. MSU, the MSU, not the structure.
okay.
You see, MSU is fake BOS inducement, right?
Yeah.
And then this is the next structural level to be mitigated to continue. But what if price takes out this level? We can't have fake BOS, inducement. It's not possible. So it means for this mitigation that was going to happen, this is the invalidation level here.
Okay.
That's what I'm talking about. So you see, we can buy this one directly because we have both can you buy and will you buy. Can you guys see that the can always comes before the will? Do you see that, everybody?
Yeah.
Good. Only on few scenarios does the will comes before the can, and I'm going to show you those few scenarios too. Now, let's jump right into this guy. We have this one. This one is a bad child, inefficient everywhere. Now, IPA, IPA. Well, can you buy?
No.
Yeah.
Everybody says no. Will you buy? Boom.
Yeah.
Yeah.
Do not forget, will you buy means you're actually pulling the trigger on your MT4. So will you pull that trigger? Will you buy?
There's an MSU.
There is an MSU, right?
Yes.
Yep.
Mm-hmm.
You got fake BOS inducement.
Yeah. So will you buy? Will you pull the trigger on your MT4? Will you place the 1,000 lots to buy that?
I feel like I'd still need another confirmation.
1,000 lots full margin.
You see, that's really challenging there. Why is it challenging? Because it is inefficient. Liquidity has been provided. We know a transaction is likely going to happen. However, it is inefficient, which means the market is not happy. It hasn't satisfied its want. And you know, it's only when it satisfies its want that it moves away from there and seeks to satisfy another want again. Does it make sense?
Yeah.
So that's why we're confused here. We know liquidity has been provided, which is will you buy? But can you buy has not been provided, which is EPA, which is the satisfaction the market needs. In this case, what do you do? Even if, look at what I did here. If you notice, price didn't even come into this market level here, this demand level here. And see price did not get there. So you can't even say, oh, I'm going to buy it because it's mitigated here. No, you can't do that. But what you can do is you can watch the lower time frame here, regain efficiency. Can you see what lower time frame did? EPA. Can everybody see that? So given this lower time frame, I can buy this directly from here. Will you buy came before can you buy? I can buy this only if the stop loss is reasonable, because when you're buying here, you still want to put your stop loss somewhere here. Why? Because this level is still allowed to be induced. So you don't want to buy here and put your stop loss here, you get induced and then price goes. Is it making sense, everybody?
Yeah.
Yes.
Please, if it is not clear, let me know. Okay, it's clear. So you see that? And then price goes up. Sometimes you'll be so lucky, price goes and then gives you a nice re-entry there, and then it goes. And now you see at this point, you see why I said supply and demand is subjective. It didn't mitigate the demand level. No, it didn't. Mitigation was not compulsory. Supply and demand is subjective. Once liquidity has been taken, price can turn. Supply and demand is just additional confluence. That happens a lot of the time, but not all the time. So you must be prepared to see what is happening here. If the momentum is already changing, if efficiency has already been regained, and if price is already delivering bullish, and stop wasting your time waiting for this level to be mitigated. Does it make sense now, everybody?
Yeah.
Are we on the same page, please?
Yeah. Yeah.
I have a question. Let me go. All right, over here, right to the second one. As long as
I'm coming, please. I'm coming. Sorry. Now, you could also have something like this. see this? We all agree that this is efficient, right?
Yeah.
Then this is inefficient. Now, price comes here. Of course, you cannot buy. But price did this. So in this case, did it mitigate this demand or not?
No, it didn't.
It didn't. So if you have, similar to this, if you have lower time frame efficiency, you can buy. Also, if price refused to mitigate, if price was good enough to come here to mitigate, you can buy from here directly, because that's your fake BOS inducement and mitigation of what? Efficient price action. So you are buying on efficiency. I hope it's not too much information I'm giving you guys so far. I believe we're able to digest all the information so far.
Yeah. Yep, so far so good, baby.
Can
I know they are pretty new. Do we understand this?
Yeah.
Everybody will understand this, right?
Yeah.
Good. Now, another thing you need to know is this. For example, looking at this guy here, talking about lower time frame regaining efficiency. Look at, I'm only having straight lines, then I'm having this. You must understand this. It's about how the highs are being taken out. If I have something like this, for example, okay, and I'm talking about my lower time frame regaining efficiency, and as price was coming lower, it was making this low, this high, this low, this high, and next thing, my lower time frame does something like this. At this point, this scenario is different from this scenario or this. In this scenario, I had to drop the line from the first high that was taken. In this case, the first high that was taken was not in this, in this bullish trend, but the first high that was taken was in this bearish trend. So I have my efficiency right from here. So which means I can buy it directly from here. Do you guys see the difference, please?
No, say that one more time. Go over that one more time, please.
Look at, in this case, I could actually cut my efficiency from this high that came from this bearish trend, and then I buy upon the second leg here. In this case, I had to wait for the third leg before I could buy, because there is no leg for me to cut the efficiency from in the opposing trend here. Okay. So it has to be the next high here. Can you guys see the difference now?
Yeah.
Yeah.
Right. So that's about that. Ask your question before I touch the last part of efficiency, because we have the type 2 efficiency. Then we can call it
all right.
a day for this
regarding this structure with this example right here, it doesn't matter how far price comes down, as long as price breaks this point right here, this high right here, then it becomes efficient, because we can connect that point and that point, and this high was taken, right? So it doesn't matter how deep price comes down, as long as it takes it. Okay.
It doesn't.
All right.
I hope we're enjoying the session, though.
Yes, sir.
Thank you. Thank you. Now, if you look at this, there is something called type 2 efficiency in the market. That's what we'll call it anyways. You see, we already understand what type 2 efficiency.
Okay.
You look at the market, sometimes you have something like this. How do I put it? Let me see. You have an opposing trend. Then you have something like this. Then you see price comes here and then plays out. You see price didn't mitigate this elder brother here, this bigger supply, right? We all know that the demand level starts from here. But price reversed here. And then you begin to wonder why. The reason for this is because it is possible that on the lower time frame, what we had was price, when price was going up, buy, sell, buy, sell, buy, sell. Maybe there was something like this here, where the lower time frame had to retest this high immediately after it broke it. Maybe with a candle, maybe with a wick or something. And when that happens, price, when that happens, that automatically makes that level that I tested from here, you see this high here, from here to here becomes your demand level. Your demand level is no longer here anymore. It is from here to here. Are we together? So here is where you have the type 2 efficiency, where price can actually come to this level and react without getting here. Does it make sense, everybody?
Yeah.
Okay.
That was,
can you just go over that?
That was quickly? Exactly, yeah. Hold on. That was exactly, yeah. See my screen?
Yeah.
You see my chart here?
Yeah.
Okay. So that was exactly what I was showing you guys here. I think that was on this time frame. Oh shit. Here, earlier. Can you see what happened? See, price didn't come here, but it came here because a week was tested. A week tested it just before price dropped. Can you guys see it now?
Yeah.
There are a lot of them on chat. I hope I'll be able to find as many examples today to show you guys. Look at this here. This entire buy, sell. But what did price do? It came to this week here and then drop. Can you see that?
Mm-hmm.
That's another one. There are a lot of them. You get to see them more when you start trading. Hunting for them now. I'll try my best. This one is still fair, still within that level. Look at this one here. You look at this. After price broke, this buy to sell, this one tested, this one tested. And instead of price to come to this level, price came to where? To this level. Can everybody see it?
Yeah.
So efficiency. Let me see if I'll see another one. This one is not. Look at this one here. Sell price come to this level. Price came to this level. Can you see it now?
Yep.
Tends to happen a lot. Yeah. I hope those examples were able to at least shed the lights on it for you guys. Does it make sense?
Yes.
Thank you. Yeah. Have you got any question so far? If you got any, please let me know. There's no question for now. We'll have to take that long break now and then meet again.
Yusuf.
Yes, boss.
So how's the type 2 EPA different to like the normal one? I didn't quite catch that.
Normal EPA. Can you see that?
Yeah.
Type 2 EPA. You have the lower time frame testing here just before price drops. Therefore, rather than price coming to this entire marketplace, price came here.
Okay. Yeah. Yeah, I get you. Yeah, I get you. Okay, yeah. Thank you.
Any other question? You're welcome, brother.
I have one question about like how we know in which time frame you're looking for an inefficiency. Like for example, in the 1 hour you can find an inefficiency, and in the 5 or 15 minutes it can be efficient.
Don't worry. Everything would come together gradually. Remember, the education is in steps. Just try to take the information on what we're treating now, try to understand it. And if you have any question based on this one, I'll answer it. Then we will get. I more than likely would answer every single question and every single doubt that you have in your mind by the time we're done with the whole thing.
Okay.
Okay. So don't worry.
Sure.
So just based on what we're treating gradually, let me know if you have any concerns, you have any questions, and I would definitely handle it. Okay, guys, if there is none for now, let's call it a day for now. And we will meet again. Let me see, what's the time? Our next session, I believe we've eaten into the time because I'm actually teaching at a slow pace compared to how I do teach before. So that's fine.
Are we still meeting at 2 p.m. UK time?
So that's why I'm checking actually. All right, so let's make it 2:30 p.m. UK time, guys.
2:30, okay.
Yeah, 2:30 p.m. UK time. So we're still meeting.
No problem.
All right, see you guys soon. And yeah, catch you guys later. Bye.
Yes, thank you.
Hope you got a screenshot. I should go back there so you take it.
Yeah.